started talking about how to trade triangle chart patterns like a champ. Now, chart patterns are well documented in technical analysis literature and are based on the psychological phenomena that occur between buyers and sellers of financial instruments in liquid markets. Pattern formations do not form a trading system, but rather provide an indication of the future trend of an asset as the price breaks key psychological barriers in the form of support and resistance. So I am sure you've heard about chart patterns for online trading and their relation to technical analysis. You probably know about double tops and double bottoms, triple tops, triple bottoms, head and shoulders, rectangles, cups and saucers. You probably heard of them all. We have flags and pennants. But let's go over first and let me show you what market structure looks like. Okay, so for those of you who don't know, we'll make sure you do get them. Okay. So here on this chart, I've actually put together for you all the major, what we call market structures or patterns. Starting from the left, you can see we have a bull pennant. We there go to an ascending wedge, then a descending wedge, a triple top, a bear flag, and a bear pennant. Okay, and we're just starting over on the left. So we're here to here to here to here to here to here. Now, I personally, and this is just me, okay, I lumped most of these into what I call triangles. A bull pennant, to me, is a triangle. An ascending wedge is a triangle. There are slight variations, slight explanations. A symmetrical triangle has support and resistance lines on the same angle. An ascending wedge is pointing upward, and the two lines, the support and resistance, are on slightly different angles. Same thing with the descending wedge. Okay, a bear pennant, okay, looks like a symmetrical triangle. And we have asymmetrical triangles and descending triangles, depending on which way they are pointing. Then we have the cup and shoulder, the cup and handle, and the inverted cup and handle. And then we have the famous head and shoulders and the inverted head and shoulders. This is primarily all of those patterns, but most of them I lump into, from my interpretation, of triangles. I don't try to separate all the different kinds of triangles, okay, because they don't give you any more information memorizing all their names. They all have some general rules, but they're mostly common sense rules about the angles of the support and resistance lines. And these are called support and resistance because in an uptrend, let's find an easy one in an uptrend. This is moving in an uptrend. So the support line is the line underneath price, and the line above price is the resistance line. Okay. No different than support and resistance in trend lines. Support and resistance, when you're finding support and resistance levels, they are lines above and below the pattern. Now, how you find the pattern is a different story. We'll come to that. Now, you can see on here I've located a head and shoulders, inverted head and shoulders. Well, a head and shoulders is quite famous. Okay, it's really a very reliable pattern, except for us who are trading in small increments of time. A head and shoulders takes a long time to develop, and it takes a lot of time to see it. And for us trading CFDs, it's not really appropriate. It doesn't help us much because it takes up lots of candles. Okay, so I don't waste my time on it because it doesn't fit my trading. Okay. Now here we have a well-developed triangle. And these I just give you examples. We'll come back and learn how to put these on here. But here's our, well, we can see prices moving in a general uptrend. So the line underneath would be our support line. The price over top of the candles would be the resistance line. We have the difference between the support and resistance at the beginning of the triangle pattern. And we have what's called a breakout here, and a breakout here, which we'll talk about shortly. And this is referred to here as the apex. It's where the two lines converge and price is really being pushed into that apex. And I'm just telling you all this now because I want you to understand basically what we're talking about, so you're not sitting there lost as I give you a lot of words. We're going to go back to all this and you'll learn it all, but just so you have something in your minds about what I'm talking about. So, if you're like me, I believe that price is completely random. Okay? Because price of an asset is dictated by the psychological makeup of the buyers and the sellers. And nobody can actually predict where price is going to be anytime.